Interesting times, wouldn't you agree? The second of who knows how many stimulus packages has passed, and that sweet bailout cash should be getting into the hands of business owners and individuals in desperate need for relief from this current economic crisis. Sooner or maybe later. Some people think that this self-induced economic recession, probably the first known case of economic suicide known to man, is probably going to get a lot worse before it gets better. Some people think it will get better quick. A V-shaped recession/depression, if you will. The question then becomes, who do you trust? And who do you let guide you in times like these? Well, if there's anything you get out of watching videos on this channel, it's that panicking only makes bad problems worse. And that holds true for self-induced economic hardships. So step one, don't panic. But what's step two? Step two. Well, I don't know. We're sort of in uncharted territory here. Literally anything could happen. There is no manual on what to do next. But a next step you could take is you could watch trends and position yourself to come out of this crisis stronger than ever before. Some of the best trends to watch are what stocks billionaires are buying and selling. We're going to talk about that in this video, so be sure to give it a like for the YouTube algorithm because it definitely helps the channel reach more viewers. And be sure to leave us a comment with stocks you're paying attention to. But let's dive right in. What's up, you guys? You're watching BTP Fusion, and I'm your host, Derek West. On BTP Fusion, it's our mission to inspire you to take imperfect action on your finances and business using the power of technology. But like I said earlier, we're clearly in a time of tremendous economic upheaval. It's hard to imagine how it could get any worse, as a matter of fact. We've already smashed records in a bad way for things like unemployment filings. And that's not all, folks. Economists and others are predicting that unemployment could exceed 30%, eclipsing the worst parts of the Great Depression. And if all that wasn't bad enough, the stock market has been in the tank pretty much for at least 2 months straight now. It's gone from massive slides to massive gains, although not as massive as the slides, unfortunately. Kind of like a rock bouncing around at the bottom of a pit after a significant fall. How's that for metaphors, by the way? Comment down below. But we're not people of fear here on this channel, and neither are our viewers and subscribers. We take action without fear and learn from our failures, and we don't run from them. But what action can you take to be in a position to come out of this economic calamity stronger than before? Well, something that's always worked for me, an online business owner, a successful software engineer, an all-around good guy. What I've learned is to learn from others, both their successes and their failures. Seeing what they do, learning what it is that made them successful, and then turning around and applying it to my life. Now that means more than just reading about those success stories, but distilling those golden nuggets of information and taking action on them. Applying what really works in their life, learning how it could apply to my life, and then taking action. After all, a goal with a plan and no action is a wish list. The question then becomes, who can you learn from in times like this? Well, the reality is you can learn something from everybody, including people who fail. But typically you want to learn from people who succeed, particularly in times like these. With that in mind though, we can take lessons from some of the richest people in the world, see what they are buying and selling, apply it to our own situations, and yeah, take action. There's a quick caveat on writing coattails that I think we need to get to before we get to the good stuff. I don't think enough people are clear when they say that you should watch what someone does and apply it to your life. You really can't copy what, let's say, rich people like Warren Buffett or Carl Icahn do. Because in most cases, you won't be able to replicate exactly what they do, even if you tried. There's a reason that they're super mega investors, and we're not. There are any number of differences between you and them that will skew what you do and make you not as successful in them if you attempt to copy them 100%. And that's good and that's bad. Quick example, when guys like Carl Icahn or Warren Buffett buy and sell shares of stock, particularly in large quantities, they have to alert the SEC, that is the Securities and Exchange Commission, before they do that, particularly if they have more than 10% ownership in any one company. The SEC does this to help with transparency, i.e. to help people understand what is moving the markets up and down. And also to help to protect little investors, that's actually guys like you and me, to help protect us from large swings in prices led by big whales making enormous splashes in little pools. Again, is my metaphor game on lock or what? Let me know in the comments down below. Another quick thing you want to take note of, a lot of times you just won't have all the information that they have when they're executing their strategies. You can really only follow guys like Warren Buffett and his company Berkshire Hathaway by reading his prospectus as it is published a quarter later. But you need to take action right now, right? Prices are low right now. The market could be at the bottom right now, or it could be in the middle right now. Just keep these things in mind when you think to copy these guys, but you really need to be able to take action now on the information that you have right now. Use them as a guide, not a cheat sheet. But with that in mind, is there a way that you can be ahead of the game and follow what billionaires buy without necessarily scouring the internet for clues? Well, yeah and no. Like I said, billionaires who buy or sell over a certain level of stocks have to disclose that to the SEC. So you can look up records from the SEC to figure out what they're buying and selling, if what they're buying and selling is over certain thresholds. Now keep in mind, if they buy a little bit here and a little bit there over the course of a quarter or a year, all the while remaining under the disclosed thresholds, you simply can't know what they're purchasing. So like I said, yes and no. But you can see what billionaire hedge fund managers are trading in their funds on a quarter-to-quarter basis. Again, this is the trailing quarter. It's not necessarily live information that you can use and act on, but it is good data sets and data points to help inform your future decisions. Now, the reason you can do this is because certain types of hedge funds are required to file what's called a Form 13F. They need to file this form each quarter with the SEC, which lists all of their holdings. Now, certain websites allow you to view these filings and take a look at their internals. You would do this to see which stocks they picked up, which ones they sold, which ones they held, and the positions that they made. Again, this is all trailing data, so don't use it to act immediately on the stock market. Be sure to check out the links in the description below. This is not an affiliate link, by the way. All free knowledge to you, the BTP Fusion viewing public, but this is useful information. But what about things that you can't know? There are certain things you're just not going to be able to know just by doing research. As an example, if you're a typical person, you're not sitting with Warren Buffett as he's making decisions on what stocks to buy and what stocks to sell. That said though, you still can get messages directly from the horse's mouth. As an example, every now and then in interviews, both written and verbal, and luckily, some of the nation's biggest billionaires announce what they're buying in an effort to help inject a little optimism into the economy. And that has occurred over the past couple of weeks with folks like Warren Buffett, Carl Icahn, and Mark Cuban. Starting with Warren Buffett, most likely the greatest investor of the modern era. He built his fortune off of a simple principle of value investing and dollar cost averaging. And he recently announced he was purchasing shares in Delta Airlines, 1 million shares at the beginning of March for about an average of $46 per share. One problem. What has happened since he purchased those stocks in early March? Well, it managed to tumble down to an average price of roughly $23 a share. And Warren sold off $314 million worth of that same stock when prices were averaging that $23 price point. In addition to that, he sold off $400 million of Southwest stock as well. So again, we don't have all the information to understand why he may have made that particular position. Maybe he needed cash. Maybe he wanted to stay beneath the 10% threshold that will allow him to stay under the radar of the SEC. Any other number of factors or strategies could have played into this. We simply can't know. Coming at it from a simplistic perspective, one would think that'd be an example of what not to do. Buy high, sell low. You want to buy low, sell high. The exact opposite of what just happened. Now, you could think the company is going to go bankrupt, which will send the stock to zero. That's a big possibility. We're going to talk about companies that will be going bankrupt in an up-and-coming video. So like and subscribe and hit the notification bell so you get it when it drops. But is there a reason why one would consider Delta a worthwhile stock? Well, Delta was trading as high as $57 a share on February 21st, before the massive market plunge, and is currently trading in the range of $24 to $25 a share. If the stock never gets back to its pre-calamity price range of $57 a share, and only approaches $48 as an example, you're poised to pretty much double your money. But again, it could go to zero. Again, it's risky, but no risk, no reward. Another billionaire and former Pittsburgher and Dallas resident, Mark Cuban, is also a big believer in buying the dip. Everybody should be a believer in buying the dip, frankly. You make money when you buy low and sell high. And prices are pretty rock bottom at this time. They could go lower, but the market in general has lost almost 37% since February, so not much lower. So a good time to buy in would be close to now. So Mark Cuban purchased some shares of Twitter. One would assume that the thoughts going on in his head was that with all the social distancing going on, Twitter and other social media platforms would be good plays to profit off the trend. Mandate, really. That will certainly continue going well into the May timeframe. Since its purchase, though, Twitter has lost quite a bit of its value. Not as much as Delta, but it doesn't have a ton of room to grow either, as it's trading at $38 a share a few weeks ago and is now trading at roughly $27 a share. So it doesn't have a ton of room to go before it starts to broach new territory. But a trend to follow nonetheless. And those are just examples of investment plays that you too could make if you keep your ear to the ground. One thing you need to keep in mind, timing the markets is extremely hard to do. You could buy stocks today that then plunge tomorrow. See Warren Buffett and Mark Cuban, which would be admittedly very disheartening. But the idea is that you pick stocks which seem like they will have a decent future. A hard task to accomplish for sure. And also keep in mind that, like I said earlier, you can't necessarily replicate what these guys do exactly. After all, there's a couple of differences between you and them. Probably the most important difference that they have than you is the experience that they have. Some of the big investors, like the guys that I've mentioned, have been doing this for more than half their lives. And this is their profession. They have real experience under their belts reading the tea leaves. Don't expect to have as much market savvy as these guys. They've been doing this, as in the case of Warren Buffett, since they were young. But then again, do not let that discourage you either. Everybody starts at zero. It's about taking action and getting that experience under your belt. You can take action by dropping us a comment down below on what your thoughts are on the stocks that billionaires are buying. Do you have a plan to look for value stocks and see if you can't buy low? Let us know. And don't forget to like this video for the YouTube algorithm and subscribe and click the notification bell so you don't miss out on any of our videos. There are links in the description for some articles to check out for more research and information, and no, they're not affiliate links. And remember, a goal without a plan is a wish. A goal with a plan and no action is a wish list. Take action on your business and personal finances using the power of technology, and we'll catch you next time. Peace.